taxation. Say there are the two different types of taxations are there. One is direct taxes. Second one is indirect taxes. Direct taxes is nothing but simply the tax which is levied on individuals and institutions. Simply, what is the tax which is levied on individuals and institutions, means the tax which is levied on the persons or organizations is called as direct taxation. So here what is the rule? The burden of taxation should not be forwarded. What does it mean? Means, so this is a tax which is levied on the individuals like me. So in organizations like companies. So this is called as the direct taxation. Are you clear? When it comes to this, what is called a principle here, the tax should not be forwarded from one person to the other person or one institution to the other institution. So we cannot suppose to transfer this tax to the one people to the other people. So we cannot suppose to transfer this taxation from one organization to other transaction. So this is called as the direction, means the burden should be paid by the levied person or organization. Are you clear? This is what is called as the direct taxation. Are you clear? When it comes to the indirect taxation, the tax which is levied on what is goods and services. The tax which is levied on the goods and services. Are you clear? So the tax burden here can be transferred. The tax burden can be transferred. Best example, if you go and check, you buy one cake. There, if you see the backside of that cake, that pouch, you will find that including all taxes, means the manufactured company has already paid the tax to the government, but again it is collecting from us. Are you clear? So this is the first example. Second one is, recently whenever you go and you will buy any product including GST. Are you clear? So what is, for example, the product cost is 100 rupees, the tax GST is 5 rupees, 5%, means they are collecting 105 rupees. Actually, this 5 rupees has to be paid by the company to the government. But what they are doing, they are collecting from us and paying to the government. Are you clear? So this is called as the indirect tax. In direct tax, the burden should not be forwarded. But in direct tax, the manufacturer or service provider paid the tax. Later, they are collecting from us. Are you clear? So this is. Now we will see what are the examples of direct tax. Direct tax examples. First one is income tax. Income tax is nothing but the tax levied on individuals. The tax which is levied on the individuals, means persons. Are clear? Persons. When it comes to in India, up to 3 lakhs rupees, no tax to any individuals. Means This is called as a exempted. The people who are less than 3 lakhs rupees of income will be exempted from the income tax. They need not to pay any kind of taxation to the government. So this is what is called. After 3 lakhs, up to 6 lakhs, the tax is 5%. 5% of their total income. Means, for example, if their income is 1 lakh rupees, it's 4 lakhs rupees. For what, how much amount of the money they need to pay? Up to 3 lakhs rupees, they need not to pay the tax. What is the extra income? 1 lakh rupee. For 1 lakh rupee, how much percentage of the money they have to pay? 5%. Means what is the percentage of the tax they need to pay? 5,000 rupees. Means 5,000 rupees has to be paid to the government as a tax. Don't feel that they have to pay the tax for the entire 4 lakhs. They have to pay only the tax to the amount of the money beyond the government exempted range. Are you clear? So please remember this one. Are you clear? Most of the people will be feel that they have to pay 4 lakhs rupees as a taxation. So they need not to pay. They have to pay only this one. This is the what is called a income tax. Say what is the rule? They cannot be escaped. So it should be a compulsory paid by the people to the government. Are you clear? So this is called as the first. Second one is indirect taxes. Corporate tax. Corporate tax. The tax levied on income of the company. Income of company or organization. Okay, the tax which is levied on income of the company or organization is called as the corporate tax. Are you clear? So here what you need to remember, the tax should be, are you clear? The tax should be paid by the company which having a profits. Are you clear? So you please try to understand one point. If the company get the losses, so they are not in a position to survive well. So they can take the exemption from the government, provided they need to file the taxation and they have to clearly says or submits to the government that we are in losses. Without this, they cannot supposed to escape from the taxation. What is the taxation? It's from 30%, 20%, 10%. Based on the tax, they have how much of the amount of the money the company is getting. Are you clear? This is the most important point. You please remember. This is the tax which is paid by the company on profits. When they got the losses, they need not to pay any kind of taxation here. Are you clear? So third one is gift tax. Are you clear? What is meant by gift tax? Gift tax is nothing but, so whenever a government official or a private official should not supposed to take a gift of any kind of product or money monetarily or any aspects without paying the tax. Are you clear? This is called as the gift tax. I will give you a small example. For example, a father is there. This father having some kind of 10 lakhs rupees of property. They want to what is called as give it to their children. But how they want to give? There are the two routes are there. One is direct transfer or as in the form of gift. What is the difference here? Direct transfer means this property is completely given to that person and get registered in that person name. Are you clear? This is called as the direct transfer. There they have to pay the what is called as the revenue tax to the government. Are you clear? This is what is. But the government is getting here. But when they are giving you as a gift, Means this property is given it to the children in the form of gift. Means like a birthday gift, something else. So the earlier, before going to before gift tax, the people escaped from the taxation. So that is why the government, what it is here, even you are giving the same property to your children or someone else, you have to pay what is called a tax, which is a transferable tax, that is called as the gift tax. Are you clear? This is the another important tax. Next one is most important, fringe benefit tax. Fringe benefit tax or fringe benefit duty. Sometimes it is called as the duty. Both are the same. Only what is called. What is this fringe? Fringe means, fringes means perks. Perks or bonuses. Bonuses or employees recreation entitled center. I will tell you a simple example. For example, take the corporate companies, like some companies like TCS, Tech Mahindra, or any other what is called international companies. What they will do, whenever there is a festivals, during the festivals, what these people will do, they try to give employees like sweet boxes or some kind of movie tickets, providing the movie tickets, or restaurant coupons, like this, to what is called, give the some kind of benefits to the employees. What is their real objective? What is the reason behind this? The reason is, whenever the government, whenever these kind of companies giving the welfare to the people, so they are exempted from the taxation. So they are showing these expenses as a company expenses. Means they are showing in expenses. When they are showing in expenses, the company getting the less profits. Because of less profits, they are paying the less taxes to the government. That is the reason they are what is called, they are diverting their funds, their profits into the perks to the company employees. Then the company employees become the loyal to the company. And who are the losers here? The government, because the government is not getting the income how much they are expecting from the people. So that is what the government in 2005, then finance minister has proposed this fringe benefit tax. In 2006 itself, they have collected 20,000 crores as a fringe benefit taxes. So whatever you want to do, you do it. It is your affair. But we are not exempted. This is a fringes will not be calculated as a exempted from the taxation. You have to pay fringe benefit tax. So are you clear? So this is the another most important taxation. Next, when it comes to the small house tax, are you clear? Municipality tax, even Swachh Bharat tax, these are all comes under direct taxes. Are you clear? So you please try to understand, whenever you are paying your income directly to the government, are you clear, without avoiding, this is comes under the direct taxation. Are you clear? So next comes to the indirect taxes. Indirect taxes. Indirect tax means, best example, first one is goods tax. Goods tax, the tax which is levied on the goods which are produced by a company or manufacturer. Are you clear? But here you try to remember one thing. Initially, the company is paying the tax to that particular product. But later, after selling of this product, they are collecting from the people. Means they are escaping from the tax. Are you clear? So they have a choice because the burden of the tax can be forwarded here. Are you clear? So you please try to remember. Okay. Second one is service tax. So for example, the tax which is levied on the services, like best example, hospitality. Second one is education. Third, health. Fourth, recreation. These are all called as service taxes. Are you clear? So these are called as the service taxes. These are also can be escaped or transferred by the company to the individuals, or what is called the service seeker. Okay, who are taking that service, those can be taken this one. Okay, so this is most important. When it comes to the what is called as these service taxes. Next, most important, indirect tax, VAT, value added tax. Why this VAT? What is the VAT? VAT means value added tax. What is meant by VAT? Value added tax. Why this one? Say I will give you a small example. Take the example of goods tax. Goods tax. What is goods tax? In this goods tax, the person who is what is called buying that good has to pay the tax for the entire good. Are you clear? For example, I have brought a car. I need to pay the tax to the entire car manufactured or car selling price. Are you clear? For example, if I am buying for 10 lakhs rupees, I need to pay the tax to the 10 lakhs rupees. This is what is called the goods tax. But there is a flaw here. I will show you how. For example, take the example of one car manufacturer. Take the example of car manufacturer. Next example, take some Tata, like Scorpio. Okay, this is a car which is manufacturing. So this, for example, for this, what they are doing, they are buying tires from one company, like Seat. Okay, Seat. They paid the tax paid here. Second, later they have bought the music from Sony, paid the tax. Next, they have what is called they have brought the seats, some other person, body from another agency, and what is called as some engine from another, some Mitsubishi company, like this. So they have brought all the products from all the things, and they have assembled the product. But each and every level, whenever they are buying the product, they have already paid the tax for every product, because in the goods tax we need to pay the tax for every product. Are you clear? They have paid the tax. But after buying of all these products, it costs of 8 lakhs rupees. After manufacturing, it becomes the 8.5 lakhs rupees. 8.5 lakhs rupees. So what happened? After 8.5 lakhs rupees, they have made a profit of, they have added a profit of 50,000 rupees for the car. 50,000 rupees. So now the cost of the product is 9 lakhs rupees. I have already told you, including all taxes, the company will release the car. So after taxes, the car price is 10 lakhs rupees. Are clear? So how much amount of money they have paid, for what product they have paid the tax? That is for 9 lakhs rupees. 9 lakhs rupees they have paid the tax of 1 lakh rupees. So what is the price now? 10 lakhs rupees. Actually, what is the rule in the taxation means there is no double taxation. No double taxation. So means they cannot supposed to levy the same amount, tax on the same product twice. So you cannot supposed to collect the tax twice on the same product. But here they have already paid the tax on every time. Again, after manufacturing a complete price also they have paid the tax. Okay, so this is the reason the price of the commodities, the price of the any product is very much high. Are you clear? So this is the most important. Are you clear? Okay. So when it comes to in value added tax, what they are doing, we need not to pay the tax, the product which has already paid the taxation. Are you clear? So already paid the taxation. So we need to pay the value which was added to the tax. Value. Are you clear? So we need to pay the tax only to the product which is product valued. So valued. Are you clear? So this is called as the value added tax. Are you clear?